Good afternoon. In the last part of the session, we will open up for questions from the audience. But I think, I believe that everyone would agree with me that this afternoon we have been impressed about the power of the GIS data in generating insights and better understanding in terms of what we can use this GIS data to analyze the finance, also in terms of helping us formulating more informed policy decisions. We have Dr. Yang presented to us the GIS database, the MIT GIS database, and she gave us the overall picture of the availability, especially for the Thai database, which I think would be of interest to many of you today. And may I say also that I think Dr. Yang has the most interesting job title among speakers. I mean, her job title is data scientist, like, not as boring like economist like me. So and as we know in the new technology society, that like in Thailand we call it Thailand 4.0. I mean, data scientist is one of the jobs that is, have the potential to expand in the future. So, and then Professor Ji have presented to us the general equilibrium model, try to highlight the impact of the policy shocks, like the capital flow liberalization and the bank expansion, and try to measure the impact on welfare. And he also utilized the data from the GIS as well on the distance to the bank branch, which I think it's so true that I think in terms of financial access, I think is first and foremost a special phenomenon. I mean, you still have to be close to the financial service provider, but would be something that of interest to discuss, like going forward, the fact that we move towards more internet banking and more mobile society, how that GIS data will capture this kind of financial access. And then the last paper, Dr. Somrat, have combined 3 databases and to highlight the potential of using GIS data to understand financial access, and not only for the formal sector, but also semi-formal and informal, including potential new some finance service provider like convenience store as well. And she also ended the analysis on the possibility of using the data to analyze the vulnerabilities. Okay, so I think we got a very diverse way of using GIS data to study the issue on finance. So now I would like to open up for questions and comments from the floor, please. Yes, please, Dr. Savani.
Yeah, my name is Savani Chandapong from Bank of Thailand. I have 2 comments on Dr. Yan Ji paper on bank branch expansion and international capital flows. The first question is related to bank expansion. Have you taken into account of the impact of technological changes, particularly internet banking or mobile banking, in your study? And I would expect that it would lead to the more closure of the bank branches. And a small comment on the issue of international capital flows. For me, I would see that international capital flows transaction should be more concentrated on only central area rather than the area that you mentioned in your finding in slide number 7. Thank you.
Are there more comments or questions? No? While we were waiting, I also got some questions from the floor earlier. There's questions on for Dr. Yang. I think some of us are very interested in learning more about the Thai EconWeb GIS, whether it's available for Thai researcher. And there's also some question on, would like you to further elaborate on what are the spatial IDs. I think in your presentation you mentioned about spatial IDs. I think you combine the, you mentioned about like the latitude, longitude, and boundary ID. Right. Yes. Okay. And another question for Dr. Yang. I think will MIT lab plan to add more data sets from Thailand? For example, the SES, the database that we mentioned this morning, the socio-economic survey, or perhaps in more general in terms of how would be the protocol or the way that if Thai researcher would like to see more Thai database to appear on the GIS website, what would be the way to make it happen? Okay, and I think and maybe one question that I may have for Dr. Somarat as well. You mentioned at the end about the potential of using GIS data to analyze and to formulate the crop insurance scheme. Perhaps it would be, I think it's something exciting, and I think we heard about this in Thailand for a while now, but it have not been fruitful in a vast scale. So wonder if you have experience in terms of maybe some experience about this kind of project in other countries, and how feasible for this kind of project to take place in Thailand. Okay, but let me start from Professor Ji first.
Thank you very much for the question. So regarding the first question about mobile banking, the period we were interested in is between 1976 and 1986. And we think that during that period, probably mobile banking was not very prevalent. But I think this is a very important issue. And if we are going to study the later periods, we will definitely consider this. So what would happen in the model is that the introduction of mobile banking will reduce the transaction fee and motivating these households to hold more deposit and less cash. So it's gonna further increase GDP and better through the deposit mobilization channel. For the international capital flows, so I totally agree with you that in the data, those central areas are the areas that receive most of these international capital flows. So in our model, what happens is that who receives international capital flows are actually determined endogenously. So what we find in our simulation is that entrepreneurs living closer to bank branches are more likely to benefit from international capital flows. The reason is that these entrepreneurs, because they are living closer to bank branches, the credit entry costs are also low for these entrepreneurs. So these entrepreneurs are more likely to have financial access. When international capital flows into Thailand, these entrepreneurs will borrow additional credit from the bank. So that's why they benefit from capital flows. But entrepreneurs living farther away from bank branches, they don't benefit from international capital flows because these entrepreneurs are excluded from the financial system. So most of them, they choose to self-finance their production. And what happens in our model is that because most of these bank branches are located around the central area, so it turns out that endogenously, most of these capital flows are flowed into the central area.
So basically, for getting mapping your own data set, there's a question. There are two methods. If you just have like several indicators, not seismic like SES, maybe you can just email us and get access for the uploading functions. And for the spatial ID, it's basically the CDD ID for the new CDD ID after 2001, after 2000. So with satellite ID and then uploading, you can immediately get the map from the website. But for the systematic data set, like SES data set, and we actually first want to get the idea from researchers and the public policy makers about prioritization, because there are so many lists, such a long list of data sets available, which one should go first. And right now we just decide, by ourselves. But it would be great from the users. And also we look for the collaboration and so that, because like in the presentation one says, the aggregation and the data description, especially for the indicator description part, which support the searching function, takes a lot of insight knowledge to know that the description is actually correct. So basically, yeah, we need your inputs tell us what to do and tell us how to prioritize, and also we need your help for aggregating data, for cleaning data, and collaborating together to do this.
Yeah, so basically now the data that you show us is available on the web, and everyone could.
Yeah, it's totally free.
Yeah.
And okay. It's open to anyone.
Yeah. But in terms of adding more database, I think so far you have been using the data that are publicly available.
Yes.
For example, the data from the labor survey statistics, do you need to ask permission or get in touch with the Department of Labor here, or you basically, because it's a publicly available?
It's publicly available data, but we actually have more detailed level information, but for the privacy concern, we aggregate up.
I see. But perhaps for those data that are not publicly available on the web, maybe it might have to be the official agencies that get in touch with you in terms of.
Right, they have to grant us accessibility and to publish on the website. And also, we actually have the similar issue in the China.js website. There's two different. One is you can totally open to the general public, free. And then the other side, like we have like real estate price data, which is commercial level data. So you cannot distribute. And then you have another threshold within researchers and with under agreements with the data provider.
Thank you. Dr. Somad.
So I'd like to talk about the applications of satellite data in basically try to look into how we can use satellite data to create risk information and basically design and satellite-based or index-based insurance or credit. Right? So this idea is not new at all. Right? The index-based insurance started in developed countries, but over the past 10 years, started from the World Bank. It has been spreading in developing countries, especially in agriculture, where we don't really get very good agricultural risk data that are available. Right? So, and the index-based insurance has been proven to be effective and scale up. And the one program that I know by heart, and that simply because I'm the one who designed and helped basically launch and now scale up, is the index-based livestock insurance in Kenya, where we basically use satellite data to try to create an insurance for livestock keepers in very remote area. So those products basically also take advantage of the mobile technology. And so farmers in a very remote area of northern part of Kenya can actually sign up for the insurance and receive payout basically through mobile technology. Right? So now it has been a success in terms of the product, but it has been taken more than 7 years for this product to be proven to be successful, simply because it takes about 1 or 2 years in the design. We then need to bring this design to pilot, and so try to look into the potential impact of this product in 2 ways. So first, we basically look at potential impact by using existing data and simulate what would be the potential impact of this product. And the data that we basically require in that exercise is basically the panel data, right? And Kenya, thankfully, there's good panel data that are available, and so we use that to test the potential impact. Second thing we do is also we bring the contract to the ground, and basically you do the randomized control experiment to compare people who buy and who do not buy, and look at the potential impact there. Those take about 4 years research program, and now we are in the 7 years where we can basically have evidence-based that this product basically work, and so we then go and approach the government of Kenya, and now the product has been scaled up for the whole countries. So now, would that kind of product works in Thailand? Of course, Thailand, currently there's not many agricultural insurance products that are sustainable. The current program, the nationwide rice insurance program, rely on the relief system of the government, where farmers basically entitled to relief if there's big disaster occur, but they basically rely on the fact that the government needs to announce where disaster is, and then it requires local people to go down to the field to try to verify all the losses. So the current scheme basically takes some time from the time disaster occur until the time the people get paid out. Those are about 1 year in general. So by the time the farmers get insurance payout, they no longer need it, right? So having said that, we have planned for a collaborative research program, basically linking 3 parties right now. Us to do research, plus the Association of the Insurers, as well as the GISDA, which is the Geoinformatics and Space Technology Agency based in the Ministry of Science, who owns the satellite data that I show you. So this collaborative research would basically try to use research to basically come up with the design of several insurance products for key crops in Thailand. And we hope we can basically, in 2-3 years, be able to use this idea, bring it to the ground, and try to make it work. But good thing about Thailand, though, is that the exercise that we need in terms of to evaluate the insurance product. Say, for example, the fact that we need panel data, 1,000 Thai data would be very useful, right, in those perspectives. So I'm pretty sure Thailand has good prospects in that development.
Sounds very promising, very encouraging. Okay, I'm still waiting for more questions and comments from the floor. Please, Assistant Governor.
I was interested total account liberalization data. I wasn't sure whether liberalizing capital inflows and distance of bank branches are related in any way. The reason why I couldn't follow was that if a country liberalizes capital flows, it means that the banks can go out and borrow much more easily, can incur external debt. So once the bank borrows, it goes into the book of the banks. It's a banking book. Then it lends out as a normal credit. So whether it has a branch or no branch, distance-wise, it's still an intermediation function like any normal intermediation function. And so distance would matter through sheer access to banking services, but not the element about that cross-border, unless you're talking about loan in US dollar, which I'm not sure in those days SMEs in provinces actually go to borrow in US dollar, but still it's still manageable because every bank will have a foreign exchange trading center within the branch, within the province, because not every branch can book an LC or book foreign exchange. So I wasn't sure, can you repeat your argument about the capital account liberalization and what the data was showing? Sorry.
Okay. Sorry, maybe I confused you. So So in the data from Bank of Thailand, we know that at the aggregate level, like what the amount of capital inflows as a percent of GDP. So this amount of money flows into Thailand, flows into the banking system. But who will obtain this money is determined endogenously in the model. So suppose like all the entrepreneurs don't have financial access. When this additional amount of capital flows into the banking system, no one will benefit from this additional money because all of these entrepreneurs don't borrow from the bank. So this money will be sitting on the bank's balance sheet. So that's why endogenously only those entrepreneurs who have credit access will borrow additional money from the bank, and these entrepreneurs would benefit from capital inflows. This is what happened in our model.
And I guess the capital flow stabilization, I think in your presentation you said it would help lower the interest rate.
Yeah, also it also lowers the interest rate spread.
So that in a way help reduce credit constraint, like increase financial access in that.
It also like so by reducing the interest rate, it's gonna encourage the entrepreneurs to pay the credit entry cost and borrow credit. So all these financial frictions are interacting with each other in equilibrium. So Rob and I have another paper which is about how these different sources of financial frictions interact with each other in equilibrium. And but we find that reducing this interest rate spread doesn't contribute much to the increase in GDP growth. So most of the increase in GDP growth, increase in GDP caused by capital account liberalization is attributed to the inflows of international capital.
Okay, I think I can follow now. Okay, in those days, it was still a basket peg. So interest rate outside of Thailand is much lower. We had a high interest rate. So if you are able to source capital from abroad, then the intermediation cost will be much lower if any firm can have access to that.
Yeah.
Okay.
Yeah, but that part we didn't consider. So we don't allow these firms to borrow directly from foreigners.
But even through banks, because at that time you would recall that loan to deposit ratio was more than 100%. So every bank that mobilized deposit in this country at 100, they were lending at 120. It was pre 1997, it was
Yeah, that's right. Thanks.
I also have one follow-up on capital flow liberalization. I think in your presentation, because maybe of limit of time, you didn't have a chance to explain. I think one of the findings is that impact of capital flow liberalization caused a different impact on between entrepreneurs and workers.
Sorry for the confusion. Let me just clarify a bit. So what we find is that following a bank branch expansion, we observe a positive correlation between entrepreneurs and workers' welfare changes across different markets. So what we find is that in markets that are located closer to bank branches, both entrepreneurs and workers obtain the smallest welfare gains relative to the markets located farther away from the bank branches in 1986. So it is intuitive because the markets that are located closer to existing bank branches in 1986 don't benefit much from more branch openings because these markets are already having financial access. So that's why like both entrepreneurs and workers don't benefit much from the further reduction in credit entry costs and transaction fees. But by contrast, we find that following a capital account liberalization, in the markets that are farther away from bank branches, entrepreneurs obtain the smallest welfare gains, but workers obtain the largest welfare gains. So intuitively, this is because, as I said before, that entrepreneurs can benefit from capital account liberalization only if they have financial access, only if they can borrow money from the bank. But if entrepreneurs are living in the markets that are farther away from bank branches, these entrepreneurs don't benefit from capital inflows. So that's why these entrepreneurs obtain smallest welfare gains. But the reason that in these markets, workers obtain the largest welfare gains is kind of mechanical. The reason is that these workers, because they are farther away from bank branches, they suffer from higher transaction fees. As a result, they choose to save. They choose to consume less because in order to consume you need to hold cash, but transaction fee is higher, so they choose to consume less. And when capital flows into the country, there is a general equilibrium effect because capital flows increases the supply of capital, which lowers the equilibrium interest rate. And when interest rate is lower, the cost of production decreases. So these entrepreneurs increase their business skills and they hire more laborers, which will drive up the equilibrium wage. The increase in equilibrium wage will benefit every worker because now workers have higher income and they will increase their consumption. Those workers that are living farther away from existing bank branches, they consume less. And when their wage goes up, the increase in their consumption, their consumption will be increased proportionally by a larger amount because at the initial level, they consume less relative to the other workers who are living closer to bank branches. So that's why in these markets, we find that workers obtain the highest welfare increase following a capital account liberalization.
Okay. Thank you. Any other comment? Chris? Oh, okay. Dr. Sarah and please.
Hi, I'm Sarah from the Bank of Thailand. My question is related to the use of satellite. In particular, I want to know its limitation. That suppose, because my understanding is that we use the information on the color, which is in this case is green color for rice, right? And suppose if there's two crops that yield similar colors, but belong to different kind of shocks. Exposed to different kind of shock. One could be weather related, another one could be more concentrated on locust outbreak. But we grow these two crops in the same area, overlapping area. Is that one kind of limitation that we cannot distinguish suppose we want to design insurance scheme, but my point is, what are the limitations of these satellite data usage? Thank you.
So you make a very good point. Satellite is not a panacea for all, right? Satellite is good to estimating an area based, especially in the area where there's a large degree of homogeneity, right? And as I show you, for rice, for example, it worked very well in the rain-fed area where most of the production seems to be quite homogeneous, and it doesn't work pretty well in the central area where there's different type of crop cycle and different even crops within the same plot, right? But it also pinned down to the degree of resolution of satellite data as well. There's different type of satellite data, very high resolution satellite data doesn't come in with free cost, but it has high potential in identifying like what you just said, different type of crops and also different type of shocks that occur to the crop even within the same plot, right? So so basically the area that has those complexity, perhaps free satellite data might not work, and so if there's a need for commercialized agricultural insurance, perhaps should be time to invest in the costly but more or higher resolution satellite data. But whereas the area that are largely homogeneous, free satellite data could still work pretty well. And the Kenya program that I designed basically be based on the same satellite data that I show, simply because in northern Kenya there's a large degree of homogeneity of the rangeland in the north, and so we don't have that problem. But for bringing that back into to Thailand, for sure, we need to explore more.
Thank you.
Okay. My question is for Dr. Yang, because I'm very interested in using your data set, but I understand that certain data set may have gone through some sort of imputation, perhaps. So if you could just explain a little bit of what kind of technique that you use in terms of going from big spatial resolution to smaller resolution or over time, for example.
So So basically, the question is about how do we get the speed and also like at the tempo level, right? So basically, first you need in the cage technology. So putting it in this way, I mean, not very accurate, but it's like if you send the information, the spatial information, the spatial boundaries to the end users, the first time you send it, you kind of save the spatial information in the end users desktop on so next time you just send the tabular information and a little bit update. That's the reason you can be so fast. So basically, you just have 3 different boundaries. So the first time they load up, so the more, in another word, for the end users, the more frequent they come to this website, the more quicker for them to uploading data, to see the data. Do I explain that?
Quite a different question I asked. So I see on your data set that you have daily wage at the very refined level, very refined level of geography.
Yeah.
But I guess that might be taken from labor force survey, for example, but the information is not as refined. So there might have been some imputation generating of missing data methods. I'm not sure if you have gone through that, and if so, could you explain briefly what kind of techniques?
The techniques for, okay, I still need to understand your question actually. For the daily wage, for example, as with a lot of different non-value, right? So you want to understand how do we aggregate data? Is that the way? Or refine? No way. Yeah, if they don't.
Or some missing data.
For missing data, it's missing data. We don't go downward. We only go upward.
So again, from what I understand, is like, for example, the labor force survey is actually at the province level, but in the data set, you show at the Tambon level, you only look smaller. So I'm curious how you get from really big to small.
For the labor force survey, it's more than, no, we get data actually more than the province level.
I'm not familiar with this.
I guess I'll ask you.
Yeah.
Okay.
But usually you provide any like documents in terms of how you treat, if you have any treatment on the data, you would provide. Okay.
On the website, there's a help button, and you can download the PDF file about those analyses.
I think it's very detailed question like this because there's a lot of people who really looking forward to utilize this database. So, but unfortunately, we come to the conclusion of this afternoon session. I'm certain that I think our 3 speakers have provided very great example of how we can utilize this GIS data to enrich our analysis and policy and inspire us to do more. I think this is give us an example, but there are a lot more that we can utilize GIS data. So I would like to invite everyone to give a warm round of applause to our speakers. And I'll pass back the floor to the MC, please.